Welcome to my latest portfolio update for my Vanguard account, my Stocks and Shares ISA for July of 2023. As usual, we'll have a little quick look at some of the news been going on in the last month, both here in the UK and over in the US, and then we will dive straight into the portfolio itself, and I'll record my screen and we can look at all the gory details that have been going on. Now, very quickly from a market perspective, just going over to the US for the time being, the S&P 500 is up nearly 4% so far this month, at 3.88% as I record this video. As usual, things will very much change, but it's going up in an almost unbroken start to the year. We've had a pretty phenomenal start to the year, the stock market at the moment. Where the next 6 months will go is anyone's guess at the moment, but the S&P 500 has certainly been rocketing ahead. Now, another index I don't really talk about much, but the Dow Jones Industrial Average has now had its longest winning streak since 2017. That's 9 straight sessions of gains. Again, as I record this video, I'm sure that are about to be broken as we go into Friday, but that is pretty impressive. Now, remember that the Dow Jones Industrial Average is a bit of a weird index because it's 30 stocks, and it's not arranged by market cap, it's arranged by share price. So a little bit of a strange weighting in that index. Now, because it isn't done by market weight, it isn't affected so much when those big mega caps get hit. So, you know, your Apple, Microsofts, your Googles, your Facebooks, your Meta, etc. When those ones get hit, S&P 500 comes crashing down pretty quickly, but the Dow Jones tends to stay away from all of that because Apple, for example, isn't the heaviest stock in the portfolio. But just a quite interesting one, which kind of shows potentially a little bit of a shift maybe from some of those big exciting tech stocks and AI stocks at the moment, going back to some of the old-fashioned and some of the different stocks you've got going on in the Dow Jones at the moment. Now, just as I'm making this video, as always, last night over in the US, we had some pretty big sell-offs from Tesla, Netflix, and actually quite a lot of big tech was actually red. I'll just put up the heat map on screen now for the whole of the S&P 500. I do suspect there was a bit more going on. There's probably a bit of rebalancing going on with different ETFs and different index funds to move the market that much. There was a little bit of a green from certain sectors, but overall, lots and lots of things were red. Tesla certainly had a very bad time. They were down 10%, but I'm just looking now, pre-market, there is some green shoots coming through. So lots of people are buying up those dips. Always very interesting around earnings season, one of the most popular stocks that people love to follow. Now, just staying with this one for the time being at the moment, the S&P 500 is now less than 5% away from reaching those new all-time highs, which we haven't seen since the end of 2021, because you can remember 2022 was pretty much just a very, very slow decline all the way down. Now, what's quite interesting, I think there seems to be a lot more positive sentiment around the stock market, which really does make you worry, you know, when the rest of the market is all completely bullish and excited that the stock market's only going to go up. It's typically the time that you want to be concerned, but who knows? Lots more analysts seem to get wheeled out at the moment, calling for things to be going to all new time highs, and that we can just be going potentially even to over 5,000 points in the S&P 500. Now, quickly here in the UK, let's have a look at the FTSE 100. It's actually had a slightly better month than normal, which is very nice indeed. It's now up 1.3% for the month. And just on those shorter timescales, even though it's not really something you want to pay too much attention to, it is up 5% in a week. Now, this is because we did have some better than expected inflation data come out, so now apparently everyone wants to invest again. It's a real shame that inflation is so misunderstood and badly reported in the UK media. Remember that a lower amount of inflation still means prices go up. It's just a slower rate of inflation. So for prices to actually go down and see deflation, you would actually need a negative number. Now, this could happen later in the year 2024. That's very possible. And we should also expect this to eventually be the case with things like energy. But the market and the price caps and the way things are bought and sold at the moment, and there is definitely going to be a lot of profiteering going on, which will eventually get stopped, you'd hope, with competition within different sectors. Anyway, just an interesting thought, and I'm sure that you've also seen some headlines which make no sense at all, understanding how inflation works. But hey, you can't blame anyone. We don't get taught any of this at school. We're all trying to do our best and learn as we go, especially here on YouTube. Now, one more thing just before I head into the portfolio. A key thing at the moment, which many of you have been commenting on, is the pound strengthening against the dollar. And that does have a massive effect on your investments and how they look in your investment portfolios. Now, this question's come up several different times, but let me just give you a quick example and show you how this affects your return. So now I'm going to record my screen now. I'm going to go on Google Finance. I'm just going to draw a chart here of 3 different things. So I'm going to use VUSA, which is an S&P 500 index fund traded in pounds. I'm also then going to show you VOO, which is a very, very popular US ETF tracking the S&P 500, traded in dollars, not one that we can get ourselves involved in. And then also a final one, I'm going to show you the exchange rate between the pound and the dollar. So just going year to date at the moment, as you can see on screen now, the Vanguard S&P 500 fund, which is VUSA, has gone up 11%, which is good, really, really good, definitely. But unfortunately, the pound against the dollar has made a big charge of 6.42%. So the yellow line, which you actually see, is what most people are seeing in the media and saying, well, the stock market's up, 18.74% year to date. So why are my gains only 11%? Well, you pretty much have to add those two things together, allow a bit for fees, and really that's where you get. So you're getting your 11% gain, but you are losing out because of the strength of the pound. However, just going back to that one, again, if you're a regular investor and you're just investing every single month, you will get different prices for the exchange rate, but you do need to be aware of it and how it can have a massive effect on your investments over time. Now, first things first, actually, if you log into your own Vanguard account, if you do have an account at the moment, you will see that two-factor authentication is now actually working. So I did have to do this earlier with my phone. I got a text message, so that is a very good step for security. As we all know, Vanguard for a very long time has just had the username and password, which really from a cybersecurity perspective is pretty poor. So we do now have that. So hopefully you're all using that one and have that one set up. So as you can see, things are looking pretty healthy at the moment. We've got all green numbers, which is definitely a huge change from just a few months ago. Let me translate also on screen now, because I did have this one pop up. I'll give you a dollar figure for any amounts that we see on screen. So I will pop them up so you can have a look. But from a pound perspective, we're at £56,144.29. And last month in total, we were at £54,315. That's quite a big move. As you can see, a couple of effects happening, notably the exchange rate and also the market as it's been going up. Now, to see this in action, if you want to go into more depth, as usual, just go into the performance tab. You can see month by month. You can see how much effect that we've had in July only. Personal investment returns of £727 just in the month of July, moving us to a cumulative return of £2,690. So you can really see how things can change very, very quickly in the market, which obviously is a very, very good thing. It's always nice to see green, but it is a reminder of what you have to put up with when you are investing. And those many months beforehand where things were in the red and going down in massive negative numbers. I know I've pulled this one out before, but you can have a look here in June 2022, for example, of minus 3,313. And maybe if you hadn't been doing investing for a long time, you might see those numbers and think, wow, you've timed the market terribly, you should probably get out and sell everything. Many people were extremely bearish on the market and would never have invested. But unfortunately, it's exactly the opposite kind of mentality that you need to have. You do need to be ready to invest and really just consistently invest through the bad times. Otherwise, you can't have any of the good times. Now, as a reminder, if you are brand new, I have things very simple in this Vanguard portfolio. It's not my only portfolio. I do have several other portfolios, noticeably my InvestEngine portfolio, and I do have a Trading 212 portfolio. And just on that note, I don't have any sponsors for my channel. So if you do want to support this, a couple of things you can really do is drop a like for the video, make sure you're subscribed, drop a comment below, and if you are interested in starting investing, don't forget I do have the latest offers in the description below. You can get some free money from people like InvestEngine, and also there are free shares available from companies like Trading 212. So make sure you click those links, otherwise you won't get anything. But thanks to the hundreds of people that have done that so far, it really does help support the channel. Anyway, keeping with the investments in the account, it is super simple. I have one fund for the entire account, which is the FTSE Global All Cap Fund, which is the accumulation version. There are no dividends paid into the account. I don't have to worry about anything like that. I don't have to worry about any kind of rebalancing. This purely is a set and forget portfolio where I can just leave this here. In the future, yes, I would definitely like to add to my SIPP. At the moment, I'm more focused on building up my stocks and shares ISA as that kind of first port of call. If I can max out my stocks and shares ISA, my next place where I would like to put some more money is a SIPP. Now, of course, there's pros and cons. A SIPP does get some tax advantages going in. You get a top up from the government there of money. On its way out, it will be taxable and you can't touch it, of course, until you're late 50s. So just bear in mind those kind of things and what you want. A stocks and shares ISA does have that flexibility where it is tax-free as it grows and goes in, but also is flexible for the extent where if you really had to sell your stocks and shares ISA, you could take it out and have the money straight away. So it's really up to you. I get that question quite a lot, but it's a really, really good one. Now, moving on to another question, which I do get asked about pensions several times last month. I did get asked the question, well, how did you actually move your old company workplace pensions into a SIPP? So it's really, really simple. So let me just show you now, but just do remember, this is only for old workplace pensions. So this is somewhere now which you don't work there anymore. If you're trying to transfer a pension where you're already employed and you are getting contributions from your employer, that's totally different. So I don't even believe that you can even do that. You'd have to go and speak to your pension provider and speak to your existing provider. But for old pensions who might be from likes of Scottish Widows, Legal & General, you name it, from lots of different companies, you can transfer them and you have the right to transfer them into your own SIPP and manage them yourself. As usual, with great power comes great responsibility, so make sure you do seek financial help if you need it. And I'm certainly not a financial advisor, but it is very simple to do. Let me show you now. There's two ways, but really, if you already have a Vanguard account or if you're brand new, you just need to go to the What We Offer tab, and then you just need to go to Transfer a Pension. And pretty much from there on, it's self-explanatory. Obviously, you're going to read everything and make sure you're up to date with everything here. And you have a look at the process. So once you start the process, you are looking for it to take about 1 to 10 weeks to get it confirmed. What you're going to do is you're going to provide them with all the details of your existing pension. That existing pension will then get sold down to cash. That cash will then get moved to your Vanguard SIPP. And at that point, you'll then have to decide what to invest it in. But actually, let me just show you a few more things in this process. So again, to do that, just go through the things you'll need: the name and address of your existing provider, an account number or policy number, which should really be on. If you get those printed statements through the post, you need to look out for those ones. If you don't get printed statements, maybe because you've moved house, this is when you're going to need to look at getting those details updated. And really, that's your responsibility. So also, there are existing sites online which can help you track down those old pensions, but really maybe ask some old colleagues and find out who they were with. It'd probably be with some of the big providers again, like Scottish Widows, Legal & General, etc. You're looking out for those ones. Now, if you click Let's Get Started here, for example, you just go through all of this and saying if you're doing final salary pensions, blah, blah, blah. For me, and I guess for a lot of people, it'd be very much just a no for that one. And then very simply, you type in, for example, if it was a Legal & General one, you'd go here. If you'd actually type legal correctly, choose that one, choose your account number or policy number. Just going to make up some numbers there. You can do a part transfer. Don't forget, you could also do a full transfer. One thing it does say here, if you do have Vanguard funds in another pension provider, they can actually move those funds without actually having to sell them down to cash, which is quite interesting. At the next stage, you can then see what investments you want to do. So it will kind of ask you to select your own funds or choose a target retirement fund here. So you're going to want to choose that one here. So I don't think you can just have it going as cash. You do need to select what investments you want. So for example, you can go through here, select your own funds, and then you can decide on different percentage allocation. You can change this at any time, and you can just go through that one. But anyway, pretty self-explanatory. You then do that, click submit, and then it will take between 1 and 10 weeks. I think when I did it, it took about 3 or 4 weeks potentially. It's really, really quick. There was nothing else involved. You just sign that. They take care of everything in the background. You probably get a letter or an email from your existing provider just saying, yep, your money's been sold and it's been sent off to Vanguard. Really, really nice and simple process. There was no one to give up to call on the phone or anything like that. So you do want to go hold of it. There are your instructions. Anyway, on that note, I'll just leave everything finally up on screen now, showing both the value of the pension and the value of the ISA and the different percentage changes here. You can see the ISA is up 9.16% and the pension is up 4.3%. The main differences there really is because the pension was invested as a lump sum, quite near the height of the market, to be honest, but it doesn't really matter for a low long-term investment. And the ISA was a couple of different investments at different times. So you can see the differences there. And I did have them invested in different things previously, but now they're all in a very simple single mutual fund. And hopefully I know many of you are big fans of that one. Anyway, thank you so much for watching. As always, if you do want to follow any of my portfolio updates, make sure you're subscribed. I will leave a playlist on screen now, as always. And I'll give you my latest video as well. If you haven't watched that one, go on and give that one a look. Anyway, thanks so much for watching. Happy investing.